Good morning, traders. This is a live trade recap. I took 3 trades this morning. I have them all on video. We're going to go over everything that happened right now. As always, I start with Webull, open on the Markets tab. This is an important announcement. Webull is now only offering the 5.0 version of the desktop platform. So if you want to trade off the watch list like you see me trade, the only option now, if you haven't already downloaded this version, is to use the web platform through your browser. I was on it yesterday. It looks like it's running really well, so it's definitely worth a shot. I don't like trading off of the custom trade page. I used to do that before, and it just takes too long to switch from stock to stock, so I prefer to trade off of the watch list. I can have multiple stocks going at once, and I don't miss any entries. So that's that. All right, so as always, I start with Webull, open on the Markets tab, top gainers, 1 day, select all. I'm only interested in the top 10 stocks by volume, organized by volume. They must have a float size of generally 100 million shares or less. I will entertain stocks that are up to 110 million, and that's the absolute max. So those are low and medium float stocks. So let's take a look at the video, see the trade. So all the trades today were with PHUN. And you can see on the charts here that I've already marked out the high of the previous session. And the markets are very slow today. There's not a lot of action, not a lot of strength. If you look at the indices, they're all red right now, all about 1% or more below yesterday's high. So everything is kind of selling off today. So it's not surprising that there's not a lot of strength. There's not a lot of stocks, individual stocks moving very much right now. So all right, so yeah, you can see none of these are breaking out through the previous high, but PHUN did break out through the previous high. And first of all, let me talk about this really quick, because I'm sure a lot of you guys are going to recognize this and say, hey, why didn't you take this trade? And there's a couple of reasons. So this is an obvious 3-bar play right here, but this 3-bar play would not have worked, and I'll show you on the chart right now. Let's just take a look at the chart live. Let me go to the watch list here. So here is PHUN. So let's look at that 3-bar play. Now there's a couple of reasons why I wouldn't personally take it. One, because the price is still below the previous high, so the stock hasn't proved that there's a lot of buying power or buying interest in it yet. To me, that's my own criteria. I want to see it break out through the previous high, pull back, and then I can look for an entry. So here, we're trading below the previous high, but if you were strictly looking at the 3-bar play pattern, this is a textbook 3-bar play setup. You're coming out of consolidation here, and now there's a new direction, and you have a pullback here on this candle. So this is the first of the 3-bar play. Second bar, now the way that you're supposed to play the 3-bar play is you're supposed to wait for the break of either the first or second candle, whichever is highest. All right, so you can't get in for the break of this candle based on the 3-bar play kind of rules, so to speak. So the high of this candle is 145. So your best entry possible, if you got filled exactly where you wanted to, maybe you used a buy stop limit order, or maybe you just got lucky with your hotkeys. So your ideal entry would be 146, and then that would make your stop loss 1 cent below this candle, which would be, let's see, the low of this candle is 138, so 137. That would be the low of that candle. So let's use the 2-hour calculator right now to see what a 2-hour profit target would be. So 146 is the ideal entry, 137 is the stop loss. So 164 would be the profit target. Let's put a line on the chart right now. And then again, remember the stop loss is 137. All right, let's try to get that a little bit more accurate. All right, 164. So let's go through the chart and see if this would have worked out. So you get stopped out on that. And the main reason that I don't like the 3-bar play myself is because you're taking a trade that puts you at higher risk in general compared to the ABCD pattern that I trade. So you could see here, these were all of my trades today, these 3 up here, and you could see the risk just about 4%, 3.5%, almost 4%. And then on that 3-bar play, 6.16%. So it's a higher risk trade. Yes, the reward is higher, but I just rather take the lower risk setup. That's just my own personal preference. And this happens a lot. So I just generally stay away from it. I did used to take 3-bar plays a lot and just got burned too many times with them. Again, because you're taking higher risk. Now, this is a really, really important thing. The ABCD pattern will let you take these plays, but even with lower risk, but the price must be above the previous high. So let's say, for example, that this candle actually broke out through the previous high. Then you could take the break of this candle, and then that would be right here. Let's see, the high of this candle is 142, so 143 would be the entry. And then again, your stop would be in the same place. So let's look at that hypothetical trade. Again, we can't take it because the price wasn't above, but let's just pretend it was for a moment, just for the sake of this example. 143 and 137, and the price target is 2-hour target is 155, and you can see we went to 157. So that trade would have worked. But I don't take it because it's below the previous high. If you want to take that and you want to track it and see if you can, get better than a 33% win rate, that's a good theory to test, or a good strategy to test. So that's something that you could work on. I'm working on just testing all or nothing 2-hour trading once it's broken out through the previous high. So that's where I'm at right now. All right, so that's enough of that. That was just a little aside about the 3-bar play. So here we are with PHUN. So it's broken out through the previous high. So now it's obviously it's pulled back. I'm just waiting for a 1-minute candle to make a new high, which I think happens right about now. You can see I'm hovering over this candle. I see the high is 150. So I'm watching this bubble very closely. I'm waiting for anything higher than 150. See there, it hits 150. I don't get in because I want to see it break over 150. There's 150.05. I hit my hotkeys to get in, get filled at 151. That's an ideal entry for me. If I can get in 1 cent higher than the previous candle, that's perfect. And then my stop loss goes 1 cent below the previous candle to entry. So this is an obvious kind of support area, that 145 or psychological support. But with a stock this price, being that it's so close to $1, I just keep it there because these things can move pretty quickly. And when you're trading full position size, which would be like 10% of my account for me, you're going to have a lot of shares with a stock of this price. So every 1 cent really counts. So I would keep the stops nice and tight at 1 cent below the previous candle. Okay, so you can see I get stopped out there. Remember, my stop loss is at 145. Let's see if I get filled at 145. Just waiting for, I remember all the alerts there. Your order to sell 1 share of PHUN has been filled at 145. So I got filled exactly where I wanted to, no slippage. So now my plan and my strategy says that I have to get in for the next 1 minute candle to make a new high. This was the only stock doing anything, so I was kind of able to focus on that, and that's a good thing because each time you re-enter a stock like this or a setup like this, the probability of the trade working out goes up because if you get stopped out on the first entry, then it's likely a fake breakout. Same thing can happen on the second entry. The second entry could work out. It's a little more likely to work out than the first entry. And then the third entry is most likely to work out. But none of them have to work out. There's no rules about that. So, and I'd like to use the 3 losses and I stop trading rule because, like the 3 strikes you're out rule, because, where do you call it? Because what if the third one loses and you say, well, let me try one more time, the fourth one loses, and so on and so forth. So I just like to keep it at 3. I've tried more before and it just makes the red days larger and you feel worse because you've taken more and more trades and you kind of feel like you're gambling at that point. You just keep on taking more chances. So now I'm just waiting for a 1 minute candle to make a new high. So I'm hovering over this candle. The high is 144. So I'm waiting for anything better than 144. So again, I'm just looking at this bubble over here. I'm going to fast forward a little bit because it took a, there we go, right there. So as soon as I see 145, I get in. Stop loss is at 140. And then again, you know, I just did these calculations in my head because it was easy. They were just, you know, like a 5-cent risk. So obviously 2R is 10 cents above. But I went ahead and put them in the 2R calculator afterwards just so I have a record of them. So again, I get stopped out. But I get filled exactly where I want to on that stop. So, you know, nice controlled losses here. That's what you want. This red line is very important. That is a mark of the beginning of the ABCD pattern. So this is point A, this is point B. We're still waiting for C to form. This was the first point C, and then we had a fake breakout, so that doesn't actually make that C. You have to, at least in my eyes of the ABCD pattern, you have to continue to move that until it establishes the real low and then gives you a successful 2R trade. And if it doesn't, it's a failed ABCD pattern. That's basically it. For me, once the price gets below point A, it's definitely a failed ABCD pattern. So that's why I put that line there, just in case this thing starts to flush down hard. I don't want to accidentally get in on a pullback that's trading below that point A. So because sometimes you get kind of hyper focused on one little area where the stock is trading, and you forget about the big picture of the pattern that you're actually trading. So here it goes again. This is the third try now, so I'm waiting for anything better than 144, and I think let's just go back to that entry. No, anything higher than 143. So here it comes. There's 142, 143.5. Now I should have triggered my hotkeys right away, and there was a little delay there because I saw that 143.5, and I think I wasn't sure. But anyway, I still got filled just above 143, which is what I wanted. And I just put it in as 144, just rounded up. Or actually, no, on my spreadsheet I did, but right here I put it exactly, and then I rounded up the 2R target to 155. So you can see the risk of all these trades were very similar. So had I been trading, even with one share, it'd be the same way, but even with full position size, if that third trade would have worked out, which, like I said, it has a higher chance based on my statistics of trading this way for over 6 months during the pre-market, the third trade is the most likely trade to work out. The third trade in this case would have canceled out those first two losses, and I would have been break even on the day. But of course, it's always possible that all three trades fail, and that's why you have the 3 strikes you're out rule. If all 3 trades fail, you just stop trading. Just take the loss for the day, move on to the next day, save your capital. So here we are. Now this one was probably had the best, well, at least kind of looked like it was going to work out. I think it went up way above my entry a couple times, but never really got anywhere near the target. So there you go. So it got up to like maybe 147 or something like that. I think it hit 148 at one point on this candle here. Now, NTEC, that was in suspension at one point, so that automatically went on my list. But again, it's trading below the previous high. I used to take these trades where, you know, you're trying to kind of catch it on the way back up to the previous high, but I got burned by those a lot. So I don't know that I ever tracked like 100 of them. So that's something you could try, but I feel like that is a lower probability of working out because you're trading against the trend at that point. The price is below the previous high, so the recent trend is down, and you're trying to catch it on the way back up. That's a reversal trade. I think reversal trades are just lower probability than these ABCD setups because here you're at least trading with the trend. The price is now, you know, breaking out over the previous high, so it's in a recent uptrend, and you're trying to kind of catch a continuation of that uptrend after a pullback. So that's why I like that setup. So let's just fast forward and see what ended up happening with this trade. So it also stopped me out right there. And then I just go to my account page and you can see the total loss for the day was only 23 cents with 3 losing trades because I'm only trading with 1 share, which is what you should be doing if you're doing test trading. Whatever strategy or plan that you have in mind that you think is going to work, test it with 1 trade until you at least hit 100 trades and you've proven yourself profitable after those 100 trades. For me, profitable is anything higher than a 33% win rate because I'm trading all or nothing 2R. Well, as of today, the win rate is actually down below 33% technically. It's basically right there at break even. So it's been pretty crappy trading lately. Really what's happening, I think, is that the market is kind of in a sideways move right now. These lower float stocks aren't always affected by that because they can move independent of the direction of the market. You can see now all 3 indices are down about 1.5%. So we're obviously in a sell-off, at least as of right now. So it's not surprising, but like I said, these lower float stocks don't have to follow the overall trend of the market, and that's one of the appeals to trading individual stocks. So anyway, hopefully this was helpful to you. I'm going to continue trading this strategy and pattern until I hit at least 100 trades. I'm at 33 right now. The win rate, let's see. So okay, so this is actually the average of these win rates here. So basically adding up all of these win rates and dividing by the number of trade days, the number of actual trades right here. So this is including all the individual trades. The win rate is right at 33.33%. So technically we are at break even right now after taking 33 trades. That's kind of interesting. But and then without any errors, so there was a couple of trades here that I took that I didn't realize till after I entered them that I wasn't supposed to enter them. You can watch those videos on those trades if you want and see what I mean. But without those errors, we're at 38%, which is still profitable. Anything above 33% is profitable. So there's still, hope for this strategy. It's definitely tough right now because the market is so sideways that it's going to be tricky, but that's kind of the idea behind the all or nothing 2R trading, is that since 2 losers can be canceled out by 1 winner, you should still at least be able to stay break even when the market is sideways or in a downtrend or something like that. But we won't know until I collect more data. So we're at 33 trades right now. We got to get to at least 100. So let me know if you have any questions about any of these trades. Let me show you each individual trade where I entered them on the spreadsheet. And let me know, if you have any questions about these trades or any others that I take. And I will see you in the next video tomorrow. Tomorrow, actually, I may not be... Oh, no, tomorrow... Let me see. Yeah, tomorrow. Sorry. Tomorrow, I may not be able to trade. So you may or may not see me tomorrow. And either way, always take your stop losses no matter what. Honor your profit target. And in the long run, you should be green. Take care.